Hello, welcome to European Open Briefing for Friday, February the 8th. I'm Rafa Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we are seeing some heightened concerns about the global growth outlook, as well as trade worries. We're seeing equities. Well, actually, yesterday we saw sharp losses on Wall Street. Asian markets were mostly in negative territory this morning. China, of course, remains closed, but we are seeing some reversal in risk sentiment. The European markets have opened in positive territory. The dollar and the Japanese yen are both up on the back of the slight risk aversion we're seeing this morning. Yesterday, though, we did see a stronger bout of risk off sentiment that came after comments by President Trump that he won't be meeting with China's President Xi for trade talks before the March 1st deadline. And so that led to the sell-off in equities markets as well as in risk assets. And of course, risk-sensitive currencies such as the Australian dollar and the Kiwi both had negative news already to deal with. The Aussie extending its losses this morning. It's down at 0.7088 against the US dollar. The Kiwi, though, somewhat recovering its losses. The Canadian dollar, though, is a little bit weaker. We're seeing further losses in oil prices this morning, and that's weighing on the loonie. European currencies, both the euro and the pound, down against the US dollar, and we're going to see in a bit what's the main drivers for that weakness. First, let's talk about what President Trump said. We also did hear from the White House economic advisor Larry Kudlow saying that there's still a sizable distance to go in the trade negotiations with China, and then that was followed up by Trump's comments that there won't be a meeting with President Xi before the March 1st deadline. So that led to doubts about whether or not a deal can be reached before that crucial deadline at the beginning of March. We saw a big rally in government bonds, and therefore we saw yields falling. So despite the falling yields, the dollar is benefiting from that safe haven demand. And prior to all of that on the trade front, we had already some risk-off sentiment led by the European Commission's downward revisions to its growth forecasts for the Eurozone. We saw sharp revisions to German and Italian growth in particular, and we saw the euro coming under pressure. It touched a two-week low 1.1321 against the US dollar, and this has pretty much well, it's highly expected now that the ECB will also lower its growth forecasts at its next meeting in early March. Sterling also not doing too well yesterday, though. It did recover quite impressively later on. The pound did fall to a two-week low of 1.2852 after the Bank of England lowered its growth and inflation forecasts for the next 2 to 3 years at its policy meeting yesterday. But then at the press conference, Mark Carney refused to say that there will be an automatic rate cut if there is a no-deal Brexit. He also maintained the bank's projections that if there is a smooth Brexit, there's likely to be small hikes in interest rates, despite the fact that growth is expected to be lower even with a deal due to the global economic slowdown. And we also yesterday, another thing that was important was Theresa May did hold talks with EU President Juncker and Donald Tusk as well in Brussels, though there was no breakthrough there as had been expected. The two sides did agree to continue to hold more talks, so perhaps we could still get a deal in time before the March 29 deadline. At the moment, sterling has recovered back above the 1.29 level, though it has been drifting lower after briefly spiking, coming close to the 1.30 handle. And looking at the loonie, we do have employment numbers coming out of Canada later on at 13:30 GMT. If we do see some weakness in the labor market, that would add to speculation that the Bank of Canada will stay on hold for some time yet. We've already seen, like in other countries, rate hike expectations by the Bank of Canada falling back significantly. The loonie has fallen to 2-week lows, and it's under pressure on the back of sliding oil prices. So that's it from me. Thank you very much for watching, and have a great day.